IBM earnings out just a few moments ago. The stock up 4% after beating on both the top and bottom lines and posting surprise revenue growth, breaking a streak of 5 consecutive quarters of year-over-year declines. Joining us exclusively is IBM CFO James Kavanaugh. James, very good afternoon to you. Thanks for joining us.
Thank you, Wilfred. Thanks for having me.
So talk us through this beat today, and in particular where you see for 2020 the momentum continuing.
Yes, well, obviously we're very pleased with the solid finish to our fourth quarter and fiscal year 2019. That was really driven by the acceleration of our hybrid cloud portfolio and also capitalizing, as you saw in these results, the synergistic effect of bringing IBM and Red Hat together. Our cloud in the fourth quarter was up 23%. Red Hat, we accelerated up 24%. And Red Hat, for the first time in history, eclipsed $1 billion of revenue in a quarter. But even coupled with that, we continue to drive the fundamentals across our business model. And you see that play out here in the fourth quarter. Strong operating leverage and margin and strong free cash flow. Our margins were up 230 basis points, the best in over a decade. And I was listening to Mike earlier today. We generated $11.9 billion of free cash flow. And since the closure of the Red Hat acquisition, less than 6 months, we've now paid down $10 billion of debt in that period. So we feel pretty good about the book of our business and the portfolio as we enter 2020, which gives us the confidence in the guidance that we went out with.
I wanted to focus in, if I may, on the cloud point, James. Katie Huberty at Morgan Stanley downgraded the stock earlier in the week and said, based on their work, quote, that there are views of IBM's positioning in cloud that have not improved materially and in some cases deteriorated over the past year, suggesting that the likes of Microsoft Azure and Amazon AWS are still ahead of IBM in the marketplace. What do you say to that? Do these results suggest otherwise?
Well, I would just say, as CFO, let's take a look at the facts and the data and the acceleration that we've seen in our cloud performance throughout this year. We've went from low to mid-single digits in the beginning of the year to where we're exiting the year with over $21 billion on a trailing 12 months in terms of a cloud portfolio overall. So the numbers say one thing, but secondly, I think you're getting right at the heart of the rationale, the strategic and business rationale of why we acquired Red Hat. We now have the industry's first certified end-to-end hybrid cloud platform that provides that orchestration layer that allows us to differentiate in the marketplace. And I see over the last 2 quarters since the closure of the Red Hat acquisition, you've seen what it's done to the inflection point in our cloud base of business. And we see that continuing to accelerate into 2020.